Hello, it is March the 12th, Thursday. I am Martin Straith from the Trend Letter. And what we're going to do today is just do a quick follow-up video to one we did 2 weeks ago. And we're going to look at the S&P 500 and we'll take a look at oil as well. So 2 weeks ago, we showed this uptrend channel here with the S&P 500. And just a quick recap, what we did is we drew a trend line from the COVID low and we drove it to the next low and ran it to the sequence of lows here all the way through to Liberation Day and continue further. And then we just extended that to a parallel channel. And as you can see here, we've got the S&P 500 is in this really beautiful uptrend channel. It's got the upper level is acting as resistance and the lower level is support. And so what we had COVID, we had the nice run up after that. We got up here and we tested this key resistance level, tested it again, and then it kind of just worked its way down, tested the lower level of the channel, kind of came back, tested again here, had another little rally, tested again here, and then it kind of worked its way, had a nice long, slow rally. And then, of course, it had his legs cut out from under it from Liberation Day, all the fear about tariffs, etc. But then from Liberation Day, we continued up and we tested that upper rung again, and we had a bunch of tests up here. Now, what we did a couple of weeks ago, we drew this trend line from Liberation Day to that low here, and we ran it through. And so when we go and take a closer look at that, we can see that right here, that support level has all been holding. And at this point here, we broke this trend line here. And anytime we break a trend line, that gets us to sit up on our chair and take notice. So this date, so that was on January the 28th. And since then, you can see we started to get just a series of lower highs and then lower lows. And that tells us that, the trend, at least in the near term, is breaking. And we're now in a downtrend. Now, this video we did 2 weeks ago, you have to remember that this was just the day before the war broke out. So we were identifying this pattern for weeks before, and then we just highlighted it 2 weeks ago. So where are we today then? Well, today we want to look at, we had some key support levels. One of them we took a look at where here and here and here we kind of identified those. The key what we put in 2 weeks ago is we said, this is the one that we were really watching. You can see this long correction here, and then it rallied off that. So that to us gave us a really key support level. And you can see now that right today, we actually broke through that support level. So that's very, very important. So at 65 or 67.20, that's our key support, and now we just broke through it. Now, if the market rallies back above it, then that does not confirm. But if we get another close below there tomorrow, by the end of the week, that would be a significant correction. And that's starting to tell us, okay, things are starting to break down. So then 2 weeks ago, again, the next key support we gave was after this big drop down. And so we were looking at here for that next one. So the next one then was about 65.15, 65.20, somewhere in that range. Now, a correction down to here would really be nothing. People getting all panicky about the markets, having corrections is all part of the process. So correction here would be, not even 7%. And, 7% is nothing in the big scheme of things. Now, if we were going to continue to we break here, we might rally a little bit, then we break here. We should get a bounce off this. And then the next one. So the key next one for us is right here. So now we're talking about 62.40. So 62.40, that would probably give us a pretty good tell where we were there. Correction down to that level still is only, we're still under 11%. So again, 11% is nothing to cry about. It would be very solid. We should probably get a decent bounce off there. Should we get a breakthrough here, and work our way down, I would expect we get a pretty solid bounce, probably bounce a couple times, we may get, a pretty good rally out of that. But if we then come back down and test this level here, and if that level tests a couple times and it finally breaks, well, then we could be in for, a pretty significant correction. And ultimately, we could work our way down, all the way down to the bottom of this, parallel channel. Now, a correction down there, that would be a little bit more significant for sure. We'd be looking down at about what? We're talking about, 21, 22%. And that would be an official correction. So these are things to keep your eye on. Again, 65.30 or 65.15 is the next key support level we're looking for. Again, we'd probably get a bit of a bounce off that. But if that breaks, and if as long as these conflicts continue, if this Iranian war doesn't end in the next week or two, and it keeps spreading like it's been doing, and the Ukraine-Russia war, expands like it's been doing, and we get something happening in Taiwan, China, and keep an eye on that. There's stuff happening there too. But ultimately, this level here, 62.40, that is going to be key. If we test that, and if that breaks, that opens the door. I'm not saying it's going to go all the way down here, but it certainly opens the door for that. All right. So now let's take a look at oil. Certainly, that's been pretty volatile. Now this is a level we presented to our subscribers back in December, January, and really what it was a descending wedge pattern, and we were calling for oil's going to break out of that at some point, and it did, like early January, early mid-January, and we were looking for a target about $70. So at the point there, it went from about 55. We were looking for about 70 as a nice target level, and then of course the war broke out. And so what did that do? Well, that just, exploded higher. We saw oil go from about $70, intraday it went to about 120. The next day intraday it went down to 76. So extremely volatile. But since then, we started to see spikes higher again. We saw, over the last couple of days, Trump is just back and forth, back and forth. He's declaring the war is over, it's victory. And then we got, tankers being bombed in the Strait of Hormuz. Ships are, afraid to go through. Insurance rates are going sky high. Trump promised to have the Navy escort them through. And then today or yesterday, he's going, they want to bring on the strategic oil reserves. He said, no, we're not going to do that. Now today, he's saying he wants them on. That 400 million barrels, if that Strait of Hormuz continues to be closed, those 400 million barrels aren't going to last very long. So unless something really positive happens here, we're going to have to see where this all goes to. And I think that, what we want to see is what's the next level. People are all asking us what's going to hit. Well, if we go back to where Russia invaded Ukraine, back in, early 22, oil spiked to $130, and we could certainly see that happen again if things flare out. Now, the big thing is, if we do get a spike up to there, and then all of a sudden, Trump and Trump's got to they've got midterm elections next November. He's got to get gasoline prices down. I just see in California, the price of gasoline in California, I'm in Vancouver, it actually was higher in California if you do the exchange than it is in Vancouver. In Vancouver, we've had the highest gasoline prices in North America for years now. So, you've got that's a lot of votes happening in the country. And if he's got, gasoline and energy are high, that means inflation keeps going higher, and you're not going to get elected on that. So I think that if we get a quick solution in there in the next week or so, you're going to see, if we got up to $130, we would see oil drop dramatically. So keep that in mind. It's rising here. It's parabolic. And you know what we say about parabolic? Be careful here. Don't be the last one in. So yes, it could still go much higher, but when it turns, it's going to turn dramatically. All right. So that's it for today. Trying to keep these real short. Enjoy your weekend. Be successful in your investing. Take care, everybody.